Good morning and welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capra. Today I'm going to look at the broader markets and talk about why some option traders really are dumb. The markets have moved up from this very shallow pullback, and in a prior video I mentioned the possibility of an M-top. That did not happen, but prices exceeded slightly the prior high over here. Now they've stalled. You can see these small candle bodies. This is the current day right here. But the two prior days you can see the small candle bodies, and that signals slowing momentum. You don't have to know the names of candlesticks. Just remember whether it's a larger range, expanding range, or a contracting range, or small candle bodies. In other words, is momentum increasing or is momentum decreasing? Now, would you buy at this point after 5 days up, or would you rather be a buyer of a call option betting that the market's going to go up down here? Now, even here isn't going to be the best opportunity. The best opportunities are closer to some support rather than this shallow one. Nonetheless, prices went up. But what are option traders doing now? The dumb ones? They're loading up on call options as of last night. And so they've been bullish. It reached an extreme here. The market corrected. Right? Their options deflated. And now, as the market pushed up for several days, they jump back on looking for the market to continue higher. Now, it might, but that's just not an intelligent bet to be buying call options, which have to have inflated in price after several days up. That's not where you want to enter. You'd want to enter on pullbacks. And as I mentioned, this was a rather shallow one. The ideal entry points will be down near support, and then after some stabilization, we look for prices to go higher. Now, with that being said, we'll see what happens here. But historically, and that's what we do as investors and traders, we look at the historical measurements of what happened in the past, whether that's a market internal gauge like this or price patterns, and we see what happens in the current time. And then if things are lined up, we make our intelligent trades or bets to see if history will repeat itself. It's really that simple. Of course, you do need a method as to how to interpret that. Now, so let's look at other markets here. The Dow pushing up to new all-time highs again. And, this type of a shallow pullback in of itself tells us that traders, hedge fund managers, whoever it might be, is getting a little bit too aggressive or excited about this market. This is what should happen after a run-up like you saw here. It either pulls back and corrects, right? And this market hasn't been one in where it corrects very much, not to the downside anyway. This one has been very bullish, and it corrected sideways. So as prices correct sideways into the rising 20 MA, right, that tells you that consolidation or correction has gotten to the point where it's mature enough where an advance could start again. Now, when pullbacks are this shallow, it tells us that investors and traders are getting a bit too complacent about the market. Now, as we come into year end, of course, that's bullish, and we talk about Santa Claus rallies and all that. But that aside, we know that through this price pattern, traders are getting complacent. They're not waiting for the normal pullbacks or the low-risk entry points. They're now feeling that they're going to miss the opportunity. And then when it does turn, and the turn will come, this 25,000 level, we can be sure is going to be a heavy area of resistance from a psychological point of view. And when the correction comes, they're all going to scramble to run, and they'll push prices possibly down to that support or maybe below it. The markets have been going up for a while now, so we'll see how that all unfolds. 2018 will be very interesting. So join Master Trader, and we'll profit from it together.